Welcome back, everyone. I am absolutely thrilled you're tuning in today because we are about to completely dismantle a hidden nightmare of Latin American e-commerce growth. Look, if your mid-market company is already scaling operations into LATAM and processing payments through Mercado Pago, you already know the sales potential is off the charts. But in this explainer, we're taking a hard look behind the curtain to solve a massive, capital-draining problem that's secretly destroying your back office. Let's just get right into it.
Okay, let's dive into this. Notice the stark contrast we have going on here. On the front end, your dashboards are lighting up, right? You're processing thousands of transactions daily. It's scaling seamlessly. The sales team is popping champagne. But over on the back end, well, we see the very grim reality of your ledger. Your finance department is absolutely fracturing under the sheer transaction volume. The sales team might be celebrating, but your finance operations team is literally drowning in stress.
Section 1. The Ledger Reconciliation Nightmare. Welcome to the swamp. So what does this all actually mean? Well, your legacy ERP system demands strict, clean, double-entry ledger data. It has rules. But Mercado Pago? It simply doesn't speak your ERP's language. Because the raw gateway data fundamentally contradicts those super strict accounting schemas you rely on, every single successful checkout your company celebrates triggers a cascading nightmare in the back office. Instead of enjoying that seamless automation we all want, your highly paid CPAs are trapped in what we call the reconciliation swamp. They're doing the grueling, manual translation work that computers should be doing just to get your books to finally balance.
Section 2. Bottleneck 1. The raw data swamp.
Let's look exactly at what is causing all this pain. It starts with the raw data output itself. Mercado Pago doesn't just politely hand you clean, easy-to-read CSV exports. Nope. Instead, it fires off what's known as a deeply nested JSON array via webhooks. This is an incredibly complex string of data that fundamentally contradicts double-entry accounting, and your finance team just cannot easily parse it. Because they're forced to manually untangle these JSON strings, downloading reports and endlessly manipulating columns in Excel just to align settlement dates, your financial reporting ends up being a full week behind. You are totally losing your real-time cash flow visibility.
Section 3. Bottleneck 2. The math breakdown.
Now, when desperate teams try to patch this problem using standard commercial automations, like Zapier or Make.com, this brilliantly illustrates exactly why those tools fail you. Walk through these steps with me. Step 1, the system ingests a $150 fee. Simple enough, right? Step 2, your standard automator tries to calculate the 2.9% gateway fee. But step 3 is where the disaster happens. Standard tools use floating point mathematics, so it outputs something crazy like $149.99999998. It creates this tiny fractional cent error. Step 4, your ERP immediately rejects the entire batch over that fraction of a cent. Boom. And just like that, your team is right back to manual data entry.
Section 4. The high cost of traps, financial damages. Because your data is messy and those standard automations completely break your ledger, the operational damages are honestly staggering. Your finance teams are wasting 15 to 20 hours every single month. Let that sink in for a second. 20 hours. Just manually downloading raw data, fighting those floating point math errors, calculating gateway fees by hand, and typing ledger variances directly into your legacy ERP, that is a massive operational drag on your business.
Furthermore, this manual keystroke data entry leaks upwards of $2,000 per quarter in squandered human capital. You are paying highly qualified, highly paid CPAs to do basic data entry. And even worse, human keystrokes inevitably introduce errors, which creates serious audit liabilities and major compliance risks for your entire company. There's just no way around it.
Section 5. Bottleneck 3. The enterprise SaaS trap.
So, when the pain gets high enough, desperate companies often look to expensive enterprise reconciliation software. But look at how your actual options lay out here. Now, what's really interesting about this slide is the middle column, the enterprise SaaS option. Platforms like Blackline demand massive retainers. We're talking $5,000 or more every single month, plus multi-year lock-ins. But here is the real kicker. They routinely ignore regional Latin American gateways like Mercado Pago. So you pay these massive SaaS fees only to find out you have a total localization failure, and guess what? You still have to pay an engineering tax to hire someone to build custom API workarounds to your specific ERP anyway. It's wild.
Section 6. The Automated Ledger Blueprint.
So you're bleeding capital on manual labor, ridiculous software fees, and unbalanced ledgers. But we are going to relieve that tension right now with a mathematically perfect way out of the swamp. Enter the Automated Ledger Reconciliation Blueprint via NN. This is not a SaaS subscription. You are paying some crazy monthly fee. It is an industrial-grade, self-hosted data bridge that is strictly engineered for absolute financial accuracy. It operates entirely invisible in the background as a catalytic system, decoupling that raw gateway data and perfectly mapping it into your strict double-entry bookkeeping schema.
And because this isn't SaaS, this is a flat, one-time investment of $499. That's it. Zero recurring fees, zero per-task execution limits to worry about. It instantly scales from 10 to 10,000 transactions without a single drop of added effort from your finance team. You immediately recover thousands of dollars in CPA hours.
Section 7. Perfect math and secure config.
Now, for the automation engineers joining us who are wondering exactly how this solves that fractional cent issue, so the crucial point is right here, the fixed point mathematical variance engine. This is the absolute heart of the system. Instead of relying on the floating point math that standard integrations use, this specific blueprint node executes zero-error fixed-point decimal arithmetic. It ensures completely exact fee calculations and entirely eliminates those binary rounding errors. This guarantees, literally guarantees, your ERP will never again reject a batch over a fraction of a cent.
Let's move along and see how this builds securely into your infrastructure. Here we're spotlighting the global_config node structure. It utilizes a completely system-agnostic REST API output, so it connects beautifully to whatever modern or legacy ERP you're running, and it deploys in under 15 minutes. But crucially for your security posture, and this is a big deal, this node acts as a secure vault for your debit accounts, credit accounts, and ERP URLs. Operating entirely on self-hosted Docker and N8N community infrastructure, it securely manages all of your credentials without requiring a single exposed environment file and without forcing you to touch the source code at all.
Section 8. Deploy your asset today. This system is incredibly elegant, built specifically for this exact pain point. When you decide to bypass the SaaS lock-in and deploy this in your own environment, you get the complete deployment vault. And this isn't just a file, it's an entire engineering and financial workflow ready to go. You get the core end-to JSON blueprint, the step-by-step IT implementation runbook, the full architecture diagram, a QA sandbox testing payload so you can verify connections completely safely before going live, and finally, the accounting SOP exceptions document. That's a standard operating procedure for handling legitimate chargeback variances. Honestly, this package alone saves you $2,000 in developer hours right out of the gate.
Look, it's time to stop losing thousands of dollars to manual CPA data entry. You can end this monthly reconciliation bottleneck today. Head over to the workflowatelier.com/vault to secure your blueprint. Entirely bypass that enterprise SaaS lock-in and deploy a mathematically perfect data bridge in under 15 minutes.
And I'm very excited to announce that we are going to prove just how fast this actually is. In our next explainer, we will open the vault and execute a live 3-minute deployment of this exact blueprint into a production environment. Make sure you subscribe because you definitely do not want to miss that technical breakdown.
So, I want to leave you with this final critical thought. Are you ready to stop bleeding capital and finally let a mathematically perfect ledger take over your back office? Reclaim your finance team's time and permanently solve your reconciliation nightmare today? Thank you so much for joining me on this explainer, and I will see you in the next one.